budget is just around the corner, and the expectations from the budget, especially after demonetization of high value currency, are running particularly very high. With what market is expecting, what essentially will be the implication? With me now is Navneet Munot of SBI Mutual Fund. Navneet, firstly, thank you so much for taking out time for our viewers. If you could just tell us, with what has happened in terms of demonetization, what the current global picture is and the earnings outlook. Do you think markets are expecting too much going into the budget?
So that three things you asked. One is the demonetization, what has happened globally, and also the earnings, and then the expectations from the budget in that context. So on the demonetization, I think the liquidity effect, once the currency notes come back into the system, I think overall economic activity should pick up. But the income effect and wealth effect may stay for some time. So I think it will take some more, maybe a couple of months to get for the markets, for the economic activity to get normalized. On the global environment, I think after the Trump victory, as if the globally every economy becomes more inward looking, and you have more protectionism coming in, I think that will have impact on globally on every country. Also, I think Trump has talked about sharp tax rate cuts. I think India will have to pay attention to that also. From the earnings perspective, of course, I think post the demonetization, I think numbers will be all over the place. I think we'll have to wait and watch for the next quarter to see how the numbers pan out. But I think the biggest thing this year in 2017 for markets to deliver return would be the earnings growth.
Right. So going into the budget, especially after demonetization of high currency and the slowdown that people are expecting, do you expect that budget can give a stimulus or should give a stimulus for growth?
So that depends on the tax revenues on account of after the demonetization, if they go up because of the income disclosure scheme, if there is a huge inflow to the government. Because as of now, it looks like that the windfall from cancellation of notes is unlikely to happen, or even if that happens, it's going to be a small amount than what the market envisaged at the beginning. So from that context, I think the critical aspect would be how much money that the government can garner through the income disclosure scheme. If there is a window of opportunity, I'm sure they can spend that money. But going forward from 2017-18 perspective, while the market would like to have a stimulus from the government, one needs to keep in mind that keeping the overall fiscal prudence is equally important from a macroeconomic stability perspective.
So, if we just look at FY 18, this time around the tax numbers will be impacted by demonetization, two income disclosure schemes, and various people coming into the tax bracket. But over the last 3-4 years, one of the things that people don't like about the tax numbers or the budget is the optimism over the tax growth. Do you think this time around it can be more realistic, as more and more things would now come into the digital space?
So we have a lot of things now playing. So you had the demonetization, and because of that, a bigger move towards the digitalization of the economy, and automatically, hopefully, that should result into a more tax compliance. You also have GST coming in sometime during the year, and that will also have an impact on the tax compliance and tax collection. Given those variables, I think I don't know how will the finance minister look at the tax buoyancy next year. Also, the nominal GDP growth hopefully is likely to be higher next year compared to the last year. So in 2017-18. So from those perspective, if one believes that overall the impact of all the measures that the government has taken in last 2 years will result in a parallel economy shifting to mainstream economy, and that should lead to higher tax to GDP ratio, then the tax revenue should be good next year.
A lot of noise has been made around that, there could be a lot coming in for the affordable housing, for the Aam Aadmi in the budget. Do you believe that is something which is expected?
So I think what the Prime Minister announced on 31st of December, I think was a glimpse of what one can expect in the budget also. And I think rightly so, because I think the overall private capex is not happening at the pace that anybody would have thought. In fact, it's been declining on an overall number. Even the government capex looks like this year in the FY 16-17 is unlikely to be substantially higher than 15-16. So consumption would be the main driver of the economy, and maybe some bit of government spending to spur the consumption would be in order. On affordable housing particularly, I have a very strong view. I think that's one of the area of the economy where government has been paying some attention, but I think with some efforts, I think things are just falling in place for affordable housing to take off in a big way. Your interest rates are coming down. I think the overall affordability is increasing. I think if there are right tax soaps and so much of money stuck in the land as an investment for large number of people across the country, I think affordable housing can become an interesting space to look at.
So, interest rates, as you pointed out, have come, and even the 10-year yield are pointing out even lower than what the lending rates are. But that alone cannot see a pickup. So, a stimulus for certain sectors is needed.
Yeah. So, a stimulus is needed for the sector. So, whether it's the interest rate subvention, whether the tax benefits, I'm sure government has announced something last year, but I think more are likely to come. I think an overall package will work in favor of making the affordable housing a dream realizable.
Say if the government gives a stimulus, not only for affordable housing, but an overall space. As an investor, how concerned will you be about the fiscal maths? Because there is already a target that people are following and expectations are that we'll touch that target. So how important will it be to get that balance right?
I think that's quite critical, because I think I have a strong view that I think the overall macroeconomic stability, and that comes from fiscal prudence, that comes from a monetary policy which is targeting the inflation. I think some of these things are very, very critical. And I think we have seen in history in 2010, 11, 12, I think some bit of fiscal slippages, what kind of trouble it got us into 2013 when India became one of the fragile 5 countries. And after that, we did the course correction and things have improved. Looking at the overall global environment, I think it's very critical that I think we stay on the path of fiscal consolidation.
Right, but a little
particularly the global investors, and we have seen in last 3 or 4 months the global investors have been net seller. One, that overall emerging markets are not the flavor of the day, and within that I think India has also seen its share of redemptions. I think at this point in time, I think any big risk which is taken on the fiscal side could actually disappoint the global investors even more.
But if we assume that 3% is the target, and if it is 3.1, 3.2, is that fine?
I think that, so within a tight range, that would be okay. But if you're talking of something beyond 3.5%, I'm sure that would be a concern. But I think my numbers suggest at this point in time that I think government would be able to manage within that range.
So say if it actually slips, what sort of implications does it have? Can you just explain to our viewers?
I think what happens that if you have a higher fiscal deficit, if the government is crowding out the private investment, if government borrowing is larger than what the market can absorb, I think some of these things have larger implications. If the investments are not picking up and the government money, which let's say gets spent on the consumption, I think it creates inflationary pressures. There are a variety of ways, there are a variety of things that happen when you slip on the fiscal account. From an overall, I'll repeat the same sentence, that from a macroeconomic stability perspective, I think fiscal prudence. One other important thing, I missed that. If you look at the overall debt to GDP ratio of India, we are still one of the highest among the emerging markets. In the next fiscal year, you'll be surprised to know this, that the overall fiscal deficit and the interest payment will be almost same. Our interest burden has gone up so much. We'll be paying more than 5 lakh crore rupees as interest alone, because we have accumulated so much of debt within the economy. If you keep continuing on that path, at some point in time it's going to have trouble.
And also, when you do a fiscal slip, it has big implication for rates and forex.
Of course, yeah. So as I mentioned, that you crowd out the private investment, and if the government is borrowing more money, it will have implications on the interest rates.
Last time around, when fiscal maths was maintained and it was kept in a prudent manner, RBI immediately cut rates. Do you think that will be one of the key things that monetary policy will be watching out for?
I think we have heard the governor in one of the speech recently where he advised that the fiscal deficit targets must be adhered to, and I'm sure that is one of the variable that RBI looks at, apart from the inflation growth dynamics, apart from the global environment, and apart from the other monetary variables.
Right. A lot of talk about corporate tax rate getting cut, individual exemption limits being increased in a big way. If that happens, is it a big boost to the economy?
I think that is highly expected. One is that because the government had already given a glide path towards a lower corporate tax rate 2 years back, Finance Minister mentioned about it, and I'm sure as over a period of time some of the exemptions go away, and instead of that you get a lower tax rate, that will be better. In fact, the effective tax rate of overall corporate sector in India is still low. but at the same time the marginal tax rate is high and we'll have to bring it down. And also in terms of the global environment where the Donald Trump has announced a substantial cut in the corporate tax rate, I think we have to remain competitive in a global environment, because my sense is a lot of other countries are likely to follow that. In terms of individual exemptions, we know that the tax compliance rate in India is very low. Large number of households who have the taxable income but they don't pay the taxes. I think if we make it a little more easy for them, and if we make it maybe if we bring down the rates and increase the exemption limit, I mean the minimum what is that called, the
minimum exemption limit.
Minimum exemption limit, I think that will go a long way in improving the overall compliance.
Similar is also with the corporate tax rate. So say if you're paying 30% now, if it becomes 27, 26, the amount of tax collected can increase?
We have historically seen that every time tax rate was cut, I think the buoyancy has actually improved and government has got more tax collection in the subsequent year. I think historically we have seen that. In fact, one of the important thing apart from the tax rate would be the simplification of the tax regime. I think the plethora of different kinds of exemptions and deductions and different kinds of tax rates, I think if the more simpler we make it and the more easier we make it for every business, particularly the small businesses which have been out of the tax regime now, tax network now, I think how do we bring them into the tax network would be the most critical. For example, I think something like a very simplified app in all languages where you basically ask your Aadhaar number, because Aadhaar number also has the name and date of birth and whatever address and other things. So you only ask for Aadhaar number, you ask for income, you ask for maybe the tax paid and the bank account number, and then you pay the tax. If it is made so simple for a large number of small taxpayers, I think that will help the government in collecting more taxes and will give them the taxpayers also a lot more, I would say, comfort and a lot more, I would say, the
overall, if we just look at, this is the app that you're saying, or probably, one way then which we can get people. But do you think they will also want more people to come, so they will incentivize it?
Absolutely.
Smaller digital payments would get incentives.
Yeah. So I said, one is the incentivization through the lower taxes, simplified tax regime, and then you make the compliance very easy for people to file their returns and then pay their taxes, and then no questions asked to a large number of small taxpayers. I think that will go a long way. And also incentivizing digital payments is, I'm sure, as part of the government strategy to fully leverage the benefits from the demonetization.
Also, a lot of savings because of the cash economy was going into physical assets rather than financial assets or e-assets, where you can invest just via a bank account click. Do you think that would get some incentive? May not be via investment, maybe making it simple, making it more easier. You think things can change over the digital investment also?
I think so. I think that's going to be a big thing going forward.
Right. And so what sort of measures can be done over there as a mutual fund? What sort of expectation would you have for the mutual fund business?
So when the finance becomes more digital, I think over a period of time, the financialization of savings will also happen, where larger part of the household savings come to the market. So with the awareness that the mutual funds have created, the hard work that advisors and the industry have put together over a period of time with the tight regulation, there is a lot more trust within the investor community of putting money into the mutual fund. I think the government did a Jan Dhan Yojana. If they do follow it up with something like a Jan Nivesh Yojana, Pradhan Mantri Jan Nivesh Yojana, which is like, how do we channelize a large part of this household saving into the productive investments through the equity market, through the bond market, via the mutual fund vehicle. I think that will help us in variety of ways. One is that a huge amount of household savings will earn good returns. Number two, that our vulnerability that we have on the foreign investments, where something happens in US, something happens in Middle East, something happens to oil or Europe, and then our markets get few $1 billion of outflows, and that impact market, that impact currency, that impact interest rates, so many things. That reduces, because the domestic pool of savings can cushion that impact. And over a period of time, I think a large part of the risk capital is available here, which can help in boosting the entrepreneurship in India. So I think that should be one of the main agenda for the government. How do we channelize the household savings into the financial markets?
If you just look at the mutual fund flows or DII flows, they've been fantastic, whether it's November, December, maybe the start of this year as well. Say if any incentive is given or things are made simpler in the budget for digital investment, you think this number can really become big?
I think it has the potential to grow manifold even from these levels. So several things. It's a very simplified KYC regime where, let's say, if I have a bank account, I can automatically have my investments getting shifted to the mutual funds, right from some of the other capital gains tax benefit. I'm sure if the industry has talked about increasing the exemption limit for real assets to 2 lakh rupees within the ATC. Also, I think capital gains bond, which come under Section 54 EA and EB. I think if there's similar investments in some of the mutual fund schemes which invest in infrastructure bonds or equities, that can also be extended. Pension benefits. I think the pension coverage in India is still very low. I think if we incentivize and have maybe a retirement schemes within mutual funds which get the similar tax benefits for long-term savings, I think some of these things will help quite a bit in channelizing those household savings into markets.
Right. You spoke about the corporate tax rate and what can be the impact because of US. Do you think India will prepare itself before or will wait for any announcement to come in from US and then act?
I think that's almost coming. It's just that maybe on the 20th that Trump will take over, but I think that's one of the main policy agenda to bring down the corporate tax rate and also incentivize the US corporates to bring the money which is parked offshore onshore, and then incentivize them to invest a lot more in US. And it's not only about US, but I'm sure that most of the other countries are going to follow suit. I think even in Europe similar talks are happening. So I think to become more competitive, and even otherwise, I think the FM had already given a glide path 2 years back that corporate tax rate over a period of time would be brought down to 25%, and I think we should move towards that.
Right. So do you expect a big tax cut in this budget, or just the path will be decided and maybe over a period of time?
So that will depend on the overall fiscal math. I think how much leeway that he has got looking at the tax revenues and the expenditure plan that the government has got. But I'm sure, I think if there is a clear path which is given, that may not be the one full benefit in this year, but over a period of time, tax rates would be brought down, will make the overall investment climate better. There is no doubt about it.
In terms of personal exemption limits, do you expect big changes? Because the points that you made, if there is a big change, a lot more people could come under that ambit?
I think so, and I think if we adjust it for the inflation over the last 10, 15, 20 years, I think the exemption limit need to go up a little bit more, and that will help, I think, bringing in a lot many more taxpayers into the government's orbit.
In the last 24 months, if something would have not done well, that has been the export sector. Whether you talk about trade data, any data that you would have seen on export side have not looked that great. Do you think something would come to incentivize exports or growth over there?
So a lot of things that I know it's not an easy job for the finance minister. Investments are not doing well, and I think that would be the biggest concern. I think doing something for the infrastructure. Exports is also another concern, but the one positive feature is that over the last 4 months, exports have started picking up. And that's also due to the better global environment. I think there are global tailwinds now. The global economy is showing signs of improvement, and I think India has benefited from that. But there are several sectors, for example, let's say textiles or light engineering or chemicals, handicraft. There are so many industries in India which can actually gain market share even from these levels, and maybe more industry specific measures can help them.